Welcome to Marshall Motors. My name is Jason Sisson, General Manager. Today we want to go through a little bit about credit scores, how to read your credit score, and what all these things mean. So there are two main credit bureaus available in Canada. One is Equifax, one is TransUnion. They both provide a consumer report for the banks and finance companies to basically when you apply for anything. But specifically with us when you apply for a pre-owned vehicle. So they always start with name, address, birthday, things like social insurance number. First thing they look at is consumer alerts. So if somebody has a fraud warning or something on their account, it's going to be shown here. Maybe their identity's been stolen before. That's going to alert the banks to that information. Next one, the one most people are aware of, is their credit score, product score, beacon score. It's called a lot of different things, but basically that's the number that most banks determine whether you're a good credit risk or not. So they started with most people have somewhere between 400 and 800 for a number. Of course, the higher the number, the better the credit score. The score complete number doesn't really mean much at the moment. A couple months ago, the credit bureau decided they'd try to find a number for people that have limited credit. None of the banks really use this yet, so that's something that's kind of ignored. It just uses things like cell phone accounts and also even postal codes. So if people around you have good credit, you might get a little bit higher score than if people around you didn't have good credit. Identification, this is where they'll list your full name, current address, former addresses, also known as, so common with maybe a maiden name might be listed there, or somebody has a nickname that they might use. They might go by Joe, but their name's Joseph, so that might be listed here. Inquiries also comes up a lot. People are concerned about if I have too many inquiries, will that lower my credit score? So in a way, that's kind of yes. Every time somebody has a look at something when you apply, it takes 3 points off your score that month. If it's similar applications, because they know that if you apply for a vehicle here, we may have a look at your credit score, that's 1. We may send it to a couple or 3 banks to get the best approval for you. That might be 4. So then you're looking at 12 points during that month. At the end of the month, when they update the credit report, that counts as 1. What you don't want to have happen though is have a long list of credit inquiries where this week you come here, next week you go over there, next week you go over there. All of the same finance companies keep looking at your score over and over and over again. Pretty soon that's a whole page. It looks pretty bad for the bank. So we want to avoid that, but they do know that sometimes to shop around to get the best rates, you may have to apply in more than one place. Employment information. So this will have past and present employment that's been reported to the credit bureau. Things like public records. This is where small claims courts, bankruptcies will be listed. Trade information. The most important one as far as building your credit score. It keeps track of when your accounts were opened, the highest your credit's been on that specific account. Things like the terms, is that a 5-year or 6-year loan? Actually, sorry, that's what your payment is. I'll back that up a little bit. So is your payment $300, $200? Is it monthly? Is it bi-weekly? What the balance on that account is, so that's the highest or current it is right now. Any past due amounts will be listed here. Probably has the biggest effect on your credit score because this is what's happening right now. So if you're currently past due an account, it's going to seriously affect that credit score. Also this number, it's basically what it's reporting at. You'll see a little I for an installment account, and you'll see an R for a revolving account. So installment accounts are things that you make a payment on. So things like a car loan would be a good example of an installment account. It has a start date and a finish date. Revolving accounts are things like credit cards and lines of credit, so that if you add something onto your revolving account, you pay it off, you can spend that money again, and so on and so on and so on. High balances on revolving accounts will lower your credit score, which is a good reason why it's not a good idea to maybe buy a car on a line of credit, because you have that maybe $20,000 max is your line of credit. That'll lower your credit score, maybe affect future borrowing like a mortgage or something like that. You may not have the negotiation power that you thought you could have. Also, high balances on credit cards can affect your credit score, so especially if your credit's relatively new. So we would recommend keeping a balance of about half. So if your credit limit is $1,000 on your credit card, having around a $500 balance will be good for your credit score. Having a $999 balance will be bad for your credit score. So you want to keep those balances relatively low in relation to what your maximum amount is. 30, 60, 90 days, this is if it's ever been at some point in that history, 30 days late, 60 days late, or 90 days late. Very important that those all read 0. And again, the more times they're late, the lower your credit score is going to be. And It also doesn't report late on your credit bureau until it's over 30 days late. So sometimes people miss that credit card payment by a couple of weeks, still make that payment. Sometimes people will think that damage is already done, I'm a day late, I'll just double up next time. It doesn't work that way. You make the payment even if it's a little bit late. The bank will know you're late, but nobody else will until it's 30 days. So make sure you catch up on that payment before that 30-day date hits. Months reporting, that's how long you've had that account. The longer you have the account, the better for your credit score. And the date of last activity, so just the last time that account's been used. So if it hasn't reported since 2012, the bank will know that's a closed account. And the last part is collection information. So unpaid cable bills, hydro bills, phone bills will be reported on here if they get to the collection point. Any collection will lower your credit score down. An unpaid collection will lower it down even further. So if something does happen that cable bill does go to the collection, it's important to just kind of catch that up, make that payment, so at least we can get rid of this part, and then as time passes, this will have less impact on your credit score. So that is pretty much our report. If you have any questions about that, feel free to give us a call, 204-717-6000, contact us through our website, marshallusedcars.ca, or drop by, see us in person, 1500 Richmond Avenue in Brandon, Manitoba, southwest corner of the Murray Auto Centre.